What's up, everybody? Welcome back to a new video of on gold on market insights with Linux. This is the first video I'm making on this channel, so bear with me as I have to make some adjustments, for example, in the introduction. And if you're new to my channels in general, then welcome. Of course, I have a pretty major crypto channel, but I'm also into trading gold, trading indices, trading stocks. So wanted to create a separate channel for that, and that's what we'll do with this video. We'll do a deep dive into gold. We'll talk about the fundamentals, we'll talk about the technicals. My style is kind of, well, when we're talking about these videos at least, it's blending in the fundamentals with the technicals, and then based on that kind of making a prediction or analysis on the different scenarios and what's most likely. And then also, if it's relevant, to talk about some trades. But I know quite a lot of you from the crypto channel are also interested in gold. So just wanted to do a full video right here. I'll probably start covering gold more often, but also some major stocks, maybe the S&P 500, even though I usually also cover that in my market updates on the crypto channel. But alright, let's get right into it. So obviously gold has been incredibly bullish. I mean, this is the 1 hour time frame right here, but if you go to the 12-hour time frame, look, end of last week we had a pretty major test, because one level that I was looking at quite a bit for gold was this level right here at 3,300. A bit of a psychological level, but it was also the 1.618 fib of this move down, which the 1.618 fib is one of the best Fibonacci extension levels to keep an eye on to gauge market strength. Broke above that, and then with the pullback we had on Thursday, found very strong support from there. So technically, higher time frames, lower time frames were still incredibly bullish. I have a pretty set target right now to hit for gold, but we'll talk about that a little bit later. Fundamentals right now are still, look, I mean, the dollar strength index is still incredibly bearish, and it's still a very risk-off market right now. Even though the S&P 500 seems to be stabilizing a bit, the opening today was relatively bearish, or at least pre-market is trading slightly lower, and that's because of, well, I wouldn't call it escalation of the trade war, but just continuation of the trade war. With some posts by Donald Trump, for example, about well, I mean, basically that he's not changing course on these import tariffs, which, I mean, you can think about that what you want, but that does increase some more instability. And that's also what we saw, by the way. I mean, don't take my word for it. Just take a look at the volatility index, which closed or opened slightly higher. Dollar strength index, like I said, is still going down. And we also, I think, late yesterday or early this morning, we also had some news coming out about China warning against US trade deals that undermine its interests. And if we want gold to pull back a little bit here, what we want is trade deals. All right, we want trade deals with the US and other countries, of course. Mainly the EU, and, well, potentially a trade deal between US and China, but that seems very far away. But also the US and Japan, we want that, right? And China going against that, that's a bit of an escalation. And then, of course, we also still have other geopolitical tensions pushing gold up. And then technically, like I said, I mean, we formed a slight balance right here on the 1 hour time frame. I think last week into the opening right here. I would argue, and it got deleted for some reason. I would argue, look, we've broken above this level right here. It's a very minor intraday level, but still broken above that. As long as this POC, we have a bit of a high volume node right here around, what is it, like 3,330. Bit of a high volume node right there. As long as we hold that level, we're fine, all right? And we're still set to go higher. You could even say as long as we hold this level at 3,300, we're fine. But that would be a pretty deep pullback if we drop down that much. I would assume something fundamentally has changed, but for now still looks good that we're going up. The US markets are opening again after 3 days being closed. That's probably going to cause some volatility, so getting some bearish pressure, especially also with some headlines, definitely possible. But the main target I still have is this major level right here, which is a mix of Fibonacci extension levels, which, you know, it's a bit of a, well, not many people use that. If you don't know what it is, it's an amazing tool, especially in price discovery, which is kind of what we are in. And then you have 3,500, which is a psychological resistance level. So that's the main level I'm targeting, with some volatility in between. But like I said, as long as we hold that level at 3,300, we're fine. And then if fundamentally we do get some de-escalation, then we can drop down as far as 3,250. That would be the main level where I would be looking to scale back into gold, because, you know, even though I think some major resistance is coming up, I think shorting gold there is absolutely ridiculous. So buying gold is still the main opportunity, but either a strong reaction here at 3,330 or just in general a limit order at 3,250 seem like the best. That's the video. All right, welcome to the new channel, Market Insights with Linux. Hopefully it helps. I'll be doing these, I think, bi-daily, all right, so every other day. Yeah, let me know down in the comments if you have any questions. Let me know some feedback. Open for both positive and negative feedback, of course, as long as it's constructive. For now, have a great day, have a great week. Take care, and bye.